Yeah, what's up, traders? Happy New Year. Sunday here again. I wish you guys a prosperous new year 2025. Yes, let's head back to business. The time of enjoyment and holidays is over. It's a brand new year. So we have different plans and aspirations and things we need to achieve this year. We need to set goals. Uh, Without wasting time, please, if you have not subscribed to my channel, please do subscribe to my YouTube channel. All right. And do well to visit our website, againstfx.com, register, email us so that we can train you on how we can take you through on how to trade forex. All right. You need a mentor. You need somebody like me to mentor you, to really teach you how to trade. All right, we've been on this series on how to become a professional trader, starting from the scratch. All right, today's topic, we are going to be teaching, or rather talking about how to trade sideways market. We've talked about trendy market, that is the uptrend, how to trade the uptrend, and how to trade downtrend when the price when price action is going down, or when the market is bearish, or when the market is bullish. I've already talked about that. So go to my YouTube or my website. You see all those videos are available for free. Dig them out and start to learn how to trade forex. All right. So today, when we say sideways market, we simply means that when a market is going sideways. All right, sideways market simply means a market that is going sideways. All right, a market that is going sideways is not trending, it's not going up, neither is it coming down. So it's just going sideways. All right. And when that happens, you should know how to trade that kind of uh what the market has given you at that moment. You should know how to trade it. So now we say sideways market simply means when a market or price action is a push up, create a high, then fall down, create a high, all right, then breaks this down again, create a high and fall down, create a high, fall down. So you see, it's just going sideways. It's not trending up, it's not trending down. So if you enter from here, if you don't know that you have already entered sideways market, the price action, what will price action do? As you entered, yes, you have already time, you created a high, a swing high, there was a retracement. Yes, you have entered. You expected that price action should push up and break structure to the upside. All right. You did your analysis where there is no problem. But what you forget to note or to understand is that it's a sideways market. All right, it's locked up in a range. All right, something like this. It's locked up in a range. All right, when price action is locked up in a range. All right, okay, let me just make it more clear so that we will understand it. We are simply saying that price is locked up in a range. It's just going like this. It will come like this, come down, up like this. It will go up again like this, like this, like that. So when this kind of a thing happen, when you see something like this, you know that price is locked up in a range. This is the range. It's locked up in a range. And how do you trade this kind of situation, this kind of market, when you find yourself in this position and you really want to trade? Well, I will tell you as a beginner, you just stay away, because if you enter and you don't know when to exit, it will stop you out. All right. If you enter wrongly, it will stop you out. So to avoid that, as a beginner, you stay out. Stick with trending market. When you see a trend breaking a market, price action breaking structure to the upside, then when it's creating higher high, higher low, higher high, higher low, or in terms of bearish market, lower low, lower highs, lower low, lower highs, when it's creating that, you know that is trendy and is bearish. All right, when it's breaking structure to the upside, you know that it's bullish, so it's trending and is bullish. So when you now find yourself in this kind of a situation as a beginner, I advise you stay clear. But if you are a professional, as in if you have been trading for so long, all you need to do, the first thing you need to do when you find yourself in this kind of a situation, you identify key zones. All right? Identify key zone. That is the first thing you need to identify. And when we say key zone, what do we mean? We are simply referring to what? We are simply referring to what? Support and resistance level. All right, support and resistance level. So once you identify the key zone, which what are the key zones? Support and resistance level. Now when I ask you where is the support and resistance level now, it simply means that this downside this downside is what? The support. This side, the upper side, is the resistance here now. All right. So when you find yourself in this kind of a situation, immediately you see it. First thing you need to do is to identify these two faces. All right. Identify the support, which I just said the support is the downside, then the resistance is the upper side. So once that is identified, all you need to wait for is that you allow price action to get to the support level. The third thing you need to know is that allow price action to what gets to these levels before 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 you take position. All right, very very important. The third thing you need to do is you allow price action to get to these levels before you take position. Now what do I mean by that? Let's assume the price action is here. All right, you allow price to get to this place before you take position. because you know that once it gets to this level, that's the resistance level, is going to come down. Price is going to drop. All right. Or you allow price to get to the support level, then you enter because you know the price will rise from here. It's as simple as that. I don't want to dwell on that because it's very clear. You enter from the resistance level, then short the market. Enter from you enter from resistance level, you short the market. The fourth thing you need to do is that enter from resistance level, then you short the market. All right, what do I mean by that? When price has already gotten to when price action has already gotten up to this level, assuming you open your chart and you see that price action is somewhere up, which is the resistance level, all you should be looking for at that point is that you should short the market, take position and short the market. All right? You short the market. You go short. All right? You short the market. Once you open your chart and you discover that price action has traded up to this point and it bounced, it came down, it got up to this point again, it bounced, it came down, then now that you have seen that this place is a resistance level and this side here it's a support level because why price will get to this level and it will come down, it will drop, and once it gets to this level, it will rise. So now that you have identified that the key zones, all you need to do, you wait for price as it gets to the resistance level, you short the market. And where do you exit? Once you enter here, put your profit at the support level. All right, even before the support level to be on the safe side. All right, don't let it be at the support level. All right, so before the support level, you take your position, you take your profit. I beg your pardon. As a matter of fact, once you enter, you see the next uh, structure high or low. That is where you that is where you put your take profit. All right, if you enter here, it's either you exit here or you exit here. All right, don't just wait until it gets to this point because nobody knows when price action will break below this range. All right, because it will be trending like this. Price action will be trading like this for a while. Then when it's now ready to resume an uptrend or downtrend, it will break above this channel. All right, and there's a strategy called break and retest. So I will teach us when we get to that level. There's a way to follow it once it breaks above this range. All you need to do is that you wait once it breaks above, don't enter yet and wait for a retest. Because once it breaks out, it will come back. Let's say, for example, now price has been trading like this. All of a sudden, it breaks out. here you can see is now above this resistance level. So you wait for price to come down and retest this level. Then you now join to push. You now know that okay, it's going to start a bullish trend, because if it breaks, it can be a fake breakout. It just breaks out, then come back to the range again. So if you enter that time, it will stock you out. So that is why you need to be very, very careful when you are trading. You need to be very smart, and you need to know the type of strategy you need to apply at every given point of time. All right. If it's a sideways market, you know how to tackle it, how to trade it. But if you are not too good, if you are still a newbie, you stay out. You stick to trending market. All right. You stick to trending market. You trade with the trend. All right. So don't go and be losing your money. You just stick to trending market. But if you are now a professional, somebody who has been trading for so long, yes, you know how to navigate your way through any type of market. All right. So it's very, very important that we know all this. All right. So now that we know that once price get to the resistance level, all we need to be looking for is how to short the market, is how to go bearish. All right, how we can join the trend to push the price to the downside. All right, remember what I told us, always set your TP to the next support level. All right. If you are coming from the top, set your TP to the next support level. All right. Don't wait, because you never can tell where price will turn. To be on safe side, you just set your TP at the next support level. So when we now trade, you now discover that price has traded to a support level, and you see a reaction, and price is trying to go bullish again. The price is trying to rise. When I mean bullish, I'm simply saying that at a point when price has been dropping down, it will get to a point where it will start rising. So when it's rising, we say it's bullish. When price is dropping, we say it's bearish. So when you now notice that price has gotten to this support level, and it is now preparing to start rising up. So you now join the trend again. You join the trend, you put your TP at this resistance level. This resistance level. So this is how you can successfully trade sideways market anytime, any day. Like like I said, identify key zones. What are the key zones? Support and resistance. And where are the support and resistance? The upper side and the downside. The downside is support, while the upper side is the resistance. All right. Now, after you have identified all these ones, all the key zones, allow price action to get to this level before you take position. Why do I say that? If price is trending up, maybe it's coming from the support level, it's at the middle. Don't enter. Allow it to get to the resistance level before you enter. All right? Because if you enter while price is still in the middle, it can come down, it can reverse. So always allow price to get to the resistance or support level. Then once it gets to the resistance level, you short the market. Once it gets to the support level, you go bullish. All right, you buy. All right. So thank you guys. Subscribe to my YouTube channel. God bless you and have a wonderful year.